Hey there, we're going to start off today's topic. We're going to go over depreciation and amortization. Brian, I just wanted to ask you a pretty basic question. What is depreciation?
Yeah, a lot of my clients ask me that. So depreciation is when you buy a fixed asset, let's say a vehicle, a piece of equipment, over a certain threshold, you're not going to expense that 1 month. Your numbers are going to look all lopsided. Usually above $2,500, it's going to go on the balance sheet. So what you do is, you have to realize some expense with that item that you're purchasing. So you're going to depreciate it or expense it over time. There's different years and methods that you can take. Typically, let's say for a vehicle, usually it's 5 years. So you're going to expense that, over a 5-year period. And that way you're realizing the expense on that asset.
Awesome. And then the second topic with it is amortization. If you wouldn't give me a couple examples on what amortization is.
Yeah, another popular question. So amortization, that's a way to expense an intangible item or asset. So let's say you purchase a company. Part of that purchase is probably going to be a customer list. That's not something tangible, but it's still an expense the business experienced, and you're going to want to expense that over time.
Awesome.
Typically for amortization, like the customer list for that example, it's going to be over a 15-year period. So you would realize that expense over 15 years.
Very cool. I know you mentioned a little bit about like depreciation methods and lifetimes. So I just wanted to go into another topic that we hear about a lot is accelerated depreciation. So if you want to touch on that.
Yep. So there is different depreciation methods. One that is very common that we see a lot is Section 179 and bonus depreciation. And what that does, it actually allows you to depreciate the asset in full in the year of its purchase, or a larger portion of it too. So let's say you buy a vehicle, you're showing a lot of profit that year and you want to expense the vehicle in full that year using bonus depreciation or Section 179, you can actually take full depreciation in that year. Depending on what state you live in, you might not be able to take one or the other. You need to, if we're doing your tax work, you can definitely consult with us. Like we said, we have CPAs here. We are, we have a tax department. We could help you out with that.
Ryan, one last question for you. So if I were to purchase a vehicle, depreciate it, and then I go to sell it in a future year after, I wanted to renew my fleet, get a new car, how does that work, and what is the consequences that come with it?
Yeah, so we see this a lot. A lot of our clients, instead of keeping a vehicle on and keeping this old fleet they're constantly maintenance on, they'll sell an old vehicle, and they usually get some money for that. But what happens is, if you buy a vehicle, let's say for $30,000, you take full depreciation on it. So you expense $30,000, your basis actually goes back to zero. So now instead of having a basis of $30,000, you have a basis of zero. So let's say you sell that asset for $5,000 now. That whole amount, that whole $5,000 is actually a gain, and you're going to pay tax on that.
Awesome. Thank you very much. Appreciate it.
Welcome.